Good afternoon. It's the 7th of April 2021. Time is 12:30 p.m. We're going to do some market analysis on some of the forex pairs. First pair to look at is Euro AUD. So if we pull up Euro AUD and we look at the D1 chart, we're here. Price has gone up to the olive. There's still a decent gap between the olive and the black. Eventually it should be doing the black, but we could expect some sort of bounce from around the olive if need, possibly. H4, it's broken up and locked up. It's done last week's high. It's still got the high of 2 weeks ago left. If we quickly use 1.0 and 2.0 on there, we can identify whether there is any other pending gaps. So if we use the 1.0, okay, so it's left a candle close above, but the origin hasn't challenged it yet. If we take that and make that into a 2.0, we're going to say it's gone down, no candle close, back up, left a candle close, came back down, challenged the MA, broke down, locked down, broke up, locked up. There's a gap here outstanding. And if we combine the 1.0 and 2.0 together, let's have a look. Let's change the color. Yeah, so I mean the 1.0 is still limiting the price to go up further, because the origin is still quite a way of before it challenges, it breaks and locks. So we can expect possibly, if it does go there, it will go to this line here, which is the 2.0 high. But based on D1 and H4, there's a potential bounce around here, from around here. Now, if we go to H1, it looks like it's a strong uptrend going up. So let's apply the 1.0 and see if there's any more further movement up, or whether it's right now. Moment again, it's similar story to H4.
Right, so that's it. We're gonna hopefully message on the group and remind you guys, but we will
potential extension being created here with this black candle. If it remains a black candle until the end of the hour, followed by another black candle, then we should see the price retracing back down. Let's take it to 2.0. 2.0 is looking very similar to 1.0 story again. Candle close, but origin is still way back down. This candle and the next candle is going to be crucial. So if we can get black candles in the next 1 or 2 hours, then it will create an XN10, which is now then going to change the direction, and which will then become in line with the bounce on D1 that we saw earlier. Let's take it down to M30, M15 and M5. Now with M30, M15 and M5, I want to look at it not from a direction point of view, but more from a execution. So what's the best possible entry for the trade you're looking at? So in this instance, I would be cautious of taking any buys on this trade, because on this market, because the price has gone high enough. Price is quite high as it is for the day, with D1 in play, with the bounce of the olive, and then the 1.0 and 2.0 not giving you confirmation for the next available gap, and H1 creating right now what looks like a half an XN10. Once it becomes a full XN10, then you can see the price pulling down. So then the next question is, when is the best possible entry? The best possible entry could be now for a sell, take a threshold sell, which is, if it does break up and lock up, then we would cut the sell and jump onto the buy. But other than that, the up movement could be done, because if you look at M5 here, it's locked. The origin home cross origin down has happened, and the chat target is the olive on M5. The target on M5 is the olive, in line with the target on M15, which is the home. So home on M15 is at 155,646 ish area. Olive is at 155,625 ish area. Eventually you'll see on M30 that it will come down and towards the home, and by the time it comes to home, the home will also push up as well. So somewhere around there, it will come here. So if we say the halfway mark between the current price and the home on M30, you're looking at around roughly 155592. So they've all got a very similar destination. So you can take a sell with the primary direction still being somewhat of a buy because of D1 or home cross origin is still up. H4 it's up. H1 it's up. But with everything else, like everything else, what goes up must come down and what goes down must go up. So it's one of those.